in deposits and 7% in advances. Next quarter, our focus would be more on the bottom line, that is on the profits for the day. But I think year onward, we will continue to maintain this growth, what we have achieved this quarter.
You said safety side is zero tolerance for your customers. So,
no, that's what we have said, that even we have got zero tolerance for any fraudulent activity we detect in our bank. So wherever we find that our staffs are involved, we voluntarily hand them over to the police. So we are fully committed for the safety and security of our customers' funds.
You said, sir, credit card, sir.
Credit card, we are going to launch probably in this financial year. We are hopeful to launch it in the Q4. It may get delayed by another quarter, but we are definitely going to.
Thank
Relationships with this key customer segment. Through these focused initiatives, we are confident of driving CASA growth, enhancing customer engagement, and delivering long-term value for all stakeholders. I now move to the performance of Bandhan Bank for Q2 financial year 26 and the first half of financial year 26. I would like to candidly acknowledge that our Q2 financial year 26 performance were somewhat below than our internal expectations and the estimates. However, the underlying trends and structural improvements gives us confidence for an improving second half. There are a few factors that contributed to the softer Q2 financial year 26 performance outcome. Firstly, the 75 basis point repo cut, which impacted a major part of our advances, and the 200 basis points reduction in MCLR that has affected almost 50% of our books. With this moderated interest income growth in the quarter, we have partly offset this impact through reducing cost of savings accounts. However, larger benefits from lower cost of fixed deposits will come through mainly from Q4 onwards. Growth in our EEB portfolio remains subdued as the full impact of the industry level guardrails is taking longer time to materialize than anticipated. And while these factors moderated near-term performances, we remain confident in the bank's underlying strength. The initiatives we have undertaken, including enhanced collections, strengthened risk management, and disciplined growth strategies, are already in motion. We expected these measures to translate into improved growth and profitability in the upcoming quarters. On a positive note, there are several encouraging developments this quarter. Firstly, growth in our non-EEB book remains strong, reflecting the resilience and diversification of our loan portfolio. At the same time, the share of secured assets continues to rise, which strengthens the overall quality of our advances. We are also seeing renewed momentum in CASA, which is a testament to our focused efforts in building a strong and stable deposit base. In parallel, our reliance on bulk deposits continues to decline, supporting a more granular and sustainable funding profile. From an operational perspective, our OPEX to asset ratio improved quarter to quarter, highlighting disciplined cost management. Importantly, in the EV segment, SMA1 and SMA2 balances have declined sequentially, signaling some improvement in asset quality that we expect to see reflected in the coming quarters. Finally, the bank's capital and liquidity position remains robust, providing a strong foundation to support future growth and strategic initiatives. Taken together, these developments give us confidence in the resilience, efficiency, and long-term growth potential of Bandhan Bank. Now, I would like to highlight a few key developments and performance indicators from the second quarter of financial year 26. As of September 30, 2025, our gross advances stood at 1.4 lakh crore rupees, reflecting a YOY growth of 7%. On the liability side, total deposits reached 1.58 lakh crore rupees, growing by a healthy 11% YOY, and importantly, outpacing the growth in advances. This clearly reflects our strategic emphasis on maintaining a healthy balance sheet that supports sustainable growth. Our retail term deposits continue to show strong momentum, growing by 38% YOY. Our CASA deposits now account for 28% of the total deposit base, and the overall share of retail deposits, including CASA and retail deposits, improved to 71% compared to 68% in the previous quarter. This demonstrates a strong improvement in the granularity and stability of our deposit base, aligning well with our focus on building a sustainable and customer-driven franchise. We continue to execute our diversification strategy with steady progress. During the quarter, our secured book recorded a growth of 25%, resulting in an improvement in secured portfolio mix to 55% compared to 47% a year ago. Our NIM for Q2 financial year 26 stood at 5.8%, reflecting some pressure mainly due to the impact of the repo rate moderation. That said, margins continue to remain at healthy level for half year financial year 26 with the NIM at 6.1%. Credit costs saw a small improvement sequentially. Gross and net NPA ratios remain stable quarter on quarter at 5% and 1.4% respectively, while our PCR, including technical write-off, improved slightly to 87.6%. For Q2 financial year 26, our net income stood at 3,135 crore, while operating profit was 1,310 crore. The bank reported a PAT of 112 crore for the quarter. Our capital position remains strong, including Q2 financial year 26. The capital adequacy ratio stands at 18.6%. As the microfinance environment moves towards stability, we remain confident in our ability to leverage the emerging opportunities ahead. Our focus will firmly remain on prudent risk management, disciplined execution, and identifying new avenues of growth, while continuously enhancing operational efficiency to drive sustained performance. Before I conclude, I would like to reiterate that over the last year, we have articulated the Bandhan 2 strategy and have taken measures to achieve the same. We have taken steps to transition from a microfinance focused bank to a full service commercial bank. The focus of our transformation initiatives has centered around a seamless integrated customer journey and a broad-based presence in various banking segments driven by technology and cost efficiencies. Risk, compliance, and governance are the pillars on which we are moving ahead. These measures are being taken to achieve long-term value creation for our shareholders. I am confident that in the long run, we will achieve balanced profitable growth with a focus on enhancing shareholder value. Thank you.